So if a bank customer provides actual cash value of $200,000 to the bank, and the bank returns $200,000 actual cash value back to the same customer, is this a swap or exchange of $200,000 for $200,000?
Yes.
Okay, so did the agreement call for an exchange or swap of $200,000 to be swapped out for another $200,000, or did it call for a $200,000 loan?
A $200,000 loan.
Good. So is the bank to follow the Federal Reserve Bank policies and procedures when banks grant loans?
Yes.
So what are the standard bank bookkeeping entries for granting loans according to the Federal Reserve Bank policies and procedures? And I'll hand you now the Banker Fed publication entitled Modern Money Mechanics, labeled Exhibit C.
The promissory note is recorded as a bank asset, and a new matching deposit or liability is created. Then we issue a check from the new deposit back to the borrower.
So then, is this not a swap or exchange of $200,000 for $200,000?
Well, this is the standard way we do it.
Answer the question. Is it a swap or exchange of $200,000 actual cash value for $200,000 actual cash value? If the note funded the check, must they not both have equal value?
Well, I'm sorry, I'm going to have to plead the Fifth Amendment on this.
Okay. Tell me, if the bank's deposits or liabilities increase, do the bank's assets increase by an asset that has actual cash value?
Yes.
Is there any exception?
Not that I know of.
So if the bank records a new deposit and records an asset on the bank's books having actual cash value, would the actual cash value always come from a customer of the bank or an investor or a lender to the bank?
Yes.
All right. Is it the bank policy to record the promissory note as a bank asset offset by a new liability?
Yes, it is.
Does the promissory note have actual cash value equal to the amount of the bank loan check?
Yes.
Then, does this bookkeeping entry prove that the borrower provided actual cash value to fund the bank loan check?
Well, yes, it does. The bank president told us to do it this way.
All right. How much actual cash value did the bank loan to obtain the promissory note?
Nothing.
Then how much actual cash value did the bank receive from the borrower?
$200,000.
So then, is it true you received $200,000 actual cash value from the borrower plus monthly payments, and then you foreclosed and never invested 1 cent of legal tender or other depositor's money to obtain the promissory note in the first place? Is it true that the borrower financed the whole transaction?
Yes.
Are you telling me the borrower agreed to give the bank $200,000 actual cash value for free, and that the banker returned the actual cash value back to the same person as a bank loan?
I was not there when the borrower agreed to the loan.
Do the standard Fed publications show the bank receives actual cash value from the borrower for free, and that the bank returns it back to the borrower as a bank loan?
Yes.
Okay. Do you believe the bank does this without the borrower's knowledge or written permission and authorization?
No.
To the best of your knowledge, is there written permission or authorization for the bank to transfer $200,000 of actual cash value from the borrower to the bank and for the bank to keep it for free?
No.
Does this allow the bank to use this $200,000 actual cash value to fund the $200,000 bank loan check back to the same borrower, forcing the borrower to pay the bank $200,000 plus interest?
Yes.
Then if the bank transferred $200,000 actual cash value from the borrower to the bank, in this part of the transaction, did the bank loan anything of value to the borrower?
No.
Is it the bank policy to first transfer the actual cash value from the alleged borrower to the lender for the amount of the alleged loan?
Yes, it is.
Does the bank pay IRS tax on the actual cash value transferred from the alleged borrower to the bank as income?
No, because the actual cash value transferred shows up like a loan from the borrower to the bank, or a deposit, which is the same thing, so it's not taxable.
If a loan is forgiven, is it taxable?
Yes, it is.
Is it the bank policy to not return the actual cash value that they received from the alleged borrower unless it is returned as a loan from the bank to the alleged borrower?
Yes.
You never pay taxes on the actual cash value you received from the alleged borrower and keep it as bank's property?
No. No taxes paid.
When the lender receives the actual cash value from the alleged borrower, does the bank claim that it then owns it and that it is the property of the lender without the bank loaning or risking 1 cent of legal tender or other depositor's money?
Yes.
Are you telling me the bank policy is that the bank owns the promissory note, which is the actual cash value, without loaning 1 cent of other depositor's money or legal tender, that the alleged borrower is the one who provided the funds deposited to fund the bank loan check, and that the bank gets funds from the alleged borrower for free? Is the money then returned back to the same person as a loan, which the alleged borrower repays when the bank never came up with any of its own money to obtain the promissory note? Am I hearing this right? I give you the equivalent of $200,000. You return the funds back to me, and I have to repay you $200,000 plus interest. Do you think I'm stupid?
All the banks are doing this. Congress allows this.
Does Congress allow the banks to